afternoon. Welcome to a very special edition of Indianomics. The month of August began with a huge rout across global markets as the US was seen perilously close to recession, maybe already in recession. The Fed, which was expected to make 6 rate cuts over 2 years, was expected to deliver 5 cuts by December itself. And now, just after a couple of weeks, stock indexes are back at near all-time highs. The economy US economy, that is seen in fine fettle, and the Fed is expected to cut much more slowly. Amid all this noise, what's the true health of the US economy and of the global economy? And how does the global context impact India? I have a guest who strides global and Indian issues with ease, one who specializes in economics and finance with equal finesse. My guest is former Reserve Bank of India Governor and currently Professor of Finance at Booth School, Dr. Raghuram Rajan. Dr. Rajan, thank you very much indeed for joining us. Well,
Thanks for having me.
Well, that indeed is the first question, how perilously is the US close to recession, if at all? Or were all those fears, that SAM rule, etc., all overblown?
Well, there's a lot of uncertainty, right? That's why markets are moving up and down. The big uncertainty coming into August was first that unemployment numbers were going up, the claims for unemployment. So people were wondering, is this seasonality or is this the beginning of a recession? And the labor market was weakening somewhat, but then you had the jobs report in August of the jobs in July, and that was a very weak report. So there was some concern that the US was moving into recession, and since this came after the Fed meeting, there's a sense that the Fed might be behind the curve in cutting rates, and it might be too late. But since then, we've had positive reports, both on the unemployment claims, which suggest that they're not as bad, that there may be more of a seasonality element to it. And also the jobs numbers are being questioned as being particularly weak because of hurricanes and so on. And maybe next month's job numbers will look strong. Finally, you see the consumer is still very strong in the US. Sales growth was, the last numbers were 1% monthly. And that's suggesting that the third quarter in the US is also going to be a strong quarter. So the recession fears have waned a little. At the same time, one of the big concerns, which we probably will come to, is that the global carry trades, which were responsible for investment in a bunch of countries, was coming under question because the currency that was being borrowed in, the Japanese yen, was not only getting stronger as a result of Japanese monetary policy, but there was a sense that these carry trades would have to be unwound at a loss. And what's happened is the Japanese deputy governor came in saying, don't worry so much, monetary policy will adjust to the state of the markets. All this combined to shift the markets 180 degrees.
But do you think the peril still hangs that the Japanese central bank may yet hike once again? Or do you think, having learned its lesson, we are not going through this kind of attention anymore?
Well, I think it's the wrong idea for the central banks to be supporting markets. I think that we are where we are, but the Japanese central bank should be talking about inflation. That's its mandate, and it should be focused on that. And one of the dangers in Japan is really that real interest rates have to go really high. It has an enormous quantity of debt outstanding, and that is going to create enormous problems for government finances. So they have to be very careful to let inflation not get out of the bottle they have it in, which means that they have to be focused laser-like on controlling it. So if interest rates have to go up, they have to go up, but that'll prevent it from having to go up yet further, which may create more fiscal difficulties for the government.
Okay, so to come back to the US economy before I speak about markets, what is your own sense looking at all the data? You think the US is in for a serious slowdown, or is it still a very robust economy?
I think the name of the game here is uncertainty.
Okay.
That in the short run, there's enough good news and potential bad news that the Fed is actually, right in its saying that we are data contingent. And I suspect that in his Jackson Hole speech, Chairman Powell will, try not to lock himself into a course of action in September. The prediction is there will be a cut, but the question is how big a cut, and a lot of that depends on the jobs report for the month of August. If that is stronger because there were aberrant details in the July report, then the Fed may feel that it has more room, and as a result, the cut will probably be a 25 basis point cut. If, however, it turns out to be as weak as the July report, then the Fed will feel more compelled to cut. The point here is that it's anybody's guess how the economy is evolving because there are forces on both sides at this point.
So if I ask you to wear your central banker's hat and sit in the FOMC or at Jackson Hole and make that speech, what would you say? You would leave it uncertain?
Yeah, to paraphrase Dr. Reddy, masterful uncertainty is what I'd leave it at.
Okay.
I wouldn't try and guide the market more than I have to. Part of the problem, Lata, is if you look at financial conditions, which reflect how tight the Fed is.
Yes.
One measure of financial conditions is the Chicago Financial Conditions Index. That today is at its 21st century average. In other words, financial conditions are not tight. Okay. And the last thing the Fed wants, as it is trying to soft land the economy, is the economy takes off again because the Fed has been overly sort of aggressive in promising rate cuts, and financial conditions weaken. You're already seeing, as I said, the consumers is spending and spending out of savings. So it's not that the economy is particularly weak, and I think it's the last thing the Fed wants to guide the economy into yet more sort of aggressive spending. So I would not try and guide at this point and say we're waiting for the data. If it slows down too much, we'll do what is appropriate.
Okay. Masterful, what did you say? Masterful uncertainty.
Uncertainty about what I propose to do.
Okay, fair enough.
As opposed to masterly inactivity, I think that was the other.
Okay, well, there is masterly inactivity from the Reserve Bank at this point in time, and I will come to that in just a minute. But to complete the global picture, if there is a serious global slowdown, it will impact, emerging markets like India, which are at the moment doing well on growth. What's your sense? Do you think the Chinese slowdown is serious? Or do you think, the globe is not in that bad a shape and India need worry about that part?
Well, I think we should always be worrying a little. The Chinese slowdown is serious. It's a structural slowdown because their basic sort of growth supporters, the real estate sector is in deep trouble and still hasn't found a bottom. So there will be price falls are significant. Since 2021, housing starts are down 65%. So this is a economy which depended a lot on construction. That has been taken out of the equation. Now it's overly dependent on exports. And of course, we have a lot of noises about what might happen next in the US presidential election. If Mr. Trump gets elected, then you're going to see serious measures taken against Chinese exports. And of course, once it becomes hard for China to export to the US, it sends its exports to other countries, including Europe, which are going to sort of stand up against those also. So China, I think, is in serious economic difficulty. And the measures so far haven't proved particularly supportive. They're in the right direction, but they haven't helped because the primary engine, the real estate sector, needs a deep fix, needs to find the right prices to stabilize, and that may be some way off. So I think with China slowing down, The West, Europe is, Germany is still the sick man of Europe, and it will probably grow at a relatively moderate pace once again outside of Germany. But the big issue for Europe is that inflation is still out there, and services inflation is still strong. So yes, the ECB will cut, but it will cut at a moderate pace. And so that leaves the US and Japan somewhat. Japan is picking up once again, but Japan has to figure out how it manages monetary policy going forward. So all said and done, the uncertainty for the world still exists. I think the growth numbers for the US this year again are much stronger than its potential, which means that it is still the biggest engine carrying the world economy.
Yes, US exceptionalism, as they call it, continues. But just to round off and to take the point that you made, how worried should we be about November 8th? Do you think that there is a real possibility of a Republican victory? And if that happens, just what should an emerging market like India be prepared for? Big tariffs, and therefore what for us?
Yeah, I think that the polls probably break 50-50 still. And, maybe 52 Kamala, 48 Mr. Trump. So it's it's very, very close still, and who knows what will happen between now and the election. Already so much has happened, including the assassination attempt, which boosted former President Trump's numbers quite a bit for a while. So I think that we should be careful about possibilities. If you listen to the Trump advisors, they offer a scary vision of global trade, that 10% tariffs across the board. They're going to have 60% tariffs on Chinese products, and even these transshipments, which are evading U.S. Going into the U.S. via Mexico or Vietnam from China. They will be singled out and arrested.
Yes.
So the advisors are not just anti-trade, broadly speaking, but they're also very much strategically anti-China. Now, that offers both threat and possibility for India. Possibility in the sense that the China plus one, investment possibilities will become even stronger if a Trump administration comes in. The threat that any country that suddenly sees exports rising may attract the attention of the administration, no matter friend or foe. The former Trump administration didn't suggest it was differentiating between close friends like Canada and the rest of the world. So I am not sure that we should be celebrating entirely, but I think India should be quite careful in seeing if it can navigate to its advantage without, it's in nobody's interest to see a large country like China excluded from global trade. So we certainly should speak up for global trade, but where we can pick up investments, we certainly should clear the way for those investments to come to India, which almost surely means improving the environment for foreign direct investment, which has been languishing.
Oh, fair point. We would all be advantaged if trade was normal. But just to wind up this discussion on the global ambience with respect to India, do you see, therefore, a huge Chinese-led disinflation? It's already happening. US has, the European Union has already imposed close to 35% tariffs on a bunch of Chinese goods, including EVs. Indonesia, when I last heard from the South China Post, was contemplating 200% tariffs on some Chinese goods. So, should we be prepared that there will be a huge Chinese flooding if there were a Republican victory?
I think we should prepare for various alternatives. It may well be, and let me throw this out, that the Republicans, once they gain power, if they do gain power, will be a little more circumspect about what they do. President Trump is a former is still a business person, and does care about what markets do. If the idea is there would be significant high tariffs imposed suddenly, it certainly will affect U.S. business also significantly. And that might then create stock market reactions, which feed back into the administration, and the administration revisits its plan. So, a lot of possibilities exist. Again, I think as with all business, it is prepare for the worst, but hope for the best.
Yeah. Yes, election sloganeering and policy are two different animals altogether. And perhaps we may not see as much of a party manifesto getting translated. A very quick break, Dr. Rajan. Back in a minute with lots more questions, especially about India.